So heading into this week, we have a lot of potential market movers. On Tuesday, we have the CPI report, and on Wednesday, we have the PPI report. Following that, on Thursday, we have the initial jobless claims. Now, with the market still at all-time highs, here's how far Bank of America says that the S&P 500 might be headed. Let's take a listen.
With the market sitting near record highs, the big question, of course, is where are we headed from here? Let's ask B of A's Paul Ciana. He is head of the firm's fixed income, currency, commodities, and equity technical research. Good to see you, Paul. Good to be here. A lot on your plate. Huh? Yeah, exactly. Thick is fine. Yeah. S&P 500, we've obviously broken out. You've had like 8 record highs this year. Yep. New highs, I guess, tend to be more of a positive sign than not. But where are we in terms of maybe this rally being exhausted or leading to more upside?
Sure. Well, there's always an overbought market somewhere. And yes, the S&P 500 is getting a bit overbought. And we're seeing signs of tactical weakness, but that's okay. We're also seeing plenty of signs for a bullish trend. If we think back to May, when we initiated our bullish outlook for this summer, we had a very nice head and shoulders bottom in the daily chart of the S&P 500. That, like the technical textbooks would say, measures up to about 66.25. Okay. So we've been looking for a rally into the 6,500s this summer, maybe with a little upside risk to that.
And should we be bracing for any consequential pullback along the way here? I mean, we've had nice rotation this week that's kept the overall indexes in place.
We have good rotation. I think keep an eye on the Dow Jones Industrial Average and the all-time high level at about 45,000. If you want to see more rotation, we need Papa Dow to break out. Okay. Another thing to look at and favoring the breadth narrative is the percentage of stocks above the 200-day moving average has trended to higher highs with the S&P 500 going to higher highs. So there is some growing breadth within the space. What I think scares me a little bit or intimidates me a little bit is the 2018 narrative. So in technicals, we like to say that the rule of alternation occurs with corrections. And there are a lot of parallels between 2025 markets and macro with 2018. In 2018, we had that shallow correction in the first half, big rally to all-time highs, and deep correction at year end. So I think the rule of alternation suggests we get this rally to new all-time highs, and we have a mean reversion towards year-end. Okay. So maybe if we get up to 65, 6,600 towards year-end, maybe we come back down towards 6,200.
So in other words, the inversion means we got the big correction early this year.
Right.
And it would be a more modest one later on.
Exactly.
I got you.
Yep.
In terms of some individual leading stocks, Uber is one that you've focused on. It's been fascinating to me. One, it's in the industrial sector. It's been a big source of upside there. And obviously, it's got other attributes as well. How's it set up?
I mean, the Uber chart's amazing, right? 2022 to 2023, very nice uptrend. And then 24 to 25, you had this broadening out and then contraction. Right? And that's an awesome technical pattern that really represents confusion in the fundamental space. And as you start to contract, we started to get the breakout to the upside both in price and relative performance to the S&P, and we initiated upside targets of 101 and 113. Okay. So I think it's going there.
So basically, the chart's telling you the confusion has been resolved to the upside to some degree?
Absolutely.
Want to get your take on the dollar. Obviously been persistent weakness, but then for some bounces along the way here, in fact, recently as well.
Yeah. Well, the dollar index hit about 110 in February. Euro is down at 102. We caught the bottom in the euro and the peak there. And it's come screaming lower. Bad year for the dollar to secular trendline support. So I'm telling all traders and investors, keep an eye on the 97 figure even on the dollar index, because while we're above that, there's about 5 reasons why we may see a good Q3 bounce. Okay. Aside from secular trendline support, we have bullish divergence from the relative strength index. We have a slew of trend exhaustion signals from the market indicators. We have bearish sentiment, very stretched bearish sentiment from the B of A Global Research Fund Manager surveys and FX and rate sentiment surveys. Asset managers are stretched short to like record extremes. So one really good data print, for example, could just create that Q3 seasonal dollar strength, which is another reason. Seasonally speaking, Q3 is a good quarter for the dollar.
It's kind of wound tight. Yeah, I guess that makes sense.
So based on my analysis, the dollar is quite oversold. So in that regards, I do agree with him saying that we might end up seeing a strong Q3 for the dollar. And in terms of price target to the upside, I'm looking for a run back to 106. For the Nasdaq, I'm looking for a top at around 560. And in terms of a pullback, I'm looking for a 10% decline back to 495. Then I'm looking for a 19% pullback to 450. Now for the S&P 500, I'm looking for a top at around 634, and then I'm looking for a pullback to 546. With that said, I have some important levels for you guys to watch on ticker symbol AAPL Apple and ticker symbol QBTS D-Wave Quantum. Let's begin with Apple, ticker symbol AAPL. So currently Apple is having a hard time getting above resistance at 211. If the stock can't get above this level, then look for a pullback to 204. And if that level breaks, then look for a further pullback to 197. Now, if Apple can get above 211, then I want you guys to look for a 6% run to 222. And if Apple can get above 222 and hold that level as support, then look for a run to 234. Now let's take a look at D-Wave Quantum, ticker symbol QBTS. So in previous videos, while the stock was at all-time highs, I kept telling you guys that I was looking for a pullback to $13 per share. As of right now, I'm still looking for that pullback to $13 per share. With that said, D-Wave Quantum is currently running into resistance at $16 per share. If the stock can't get above this level, then look for a pullback to $14.50. And if that level breaks, then look for my target to be hit at $13 per share. Now, if the stock can get above $16 per share and hold that level as support, I want you guys to look for a 11% run to $17.53. Alright guys, if you like this video, go ahead and leave a thumbs up and let's get this video out to more viewers. Also, if you're currently watching and you're not yet subscribed, do consider subscribing to the channel. As always, thanks for watching and I'll see you guys in the next one.